Welcome to another video by Dale Wheatley, founder at theoptionshunter.com. Subscribe to our channel at the end of this video, and let's start your journey to financial freedom.
Good afternoon, everyone. It is 4:41 p.m. on Monday, June 23rd. Let's see what happened today. Had almost a double top today at about 12:30, and pretty significant downside divergence from here to here and here to here. So, definitely downward pressure on the volatility index, which led to a market move up. In fact, all of the markets moved up at the same time. So you don't really see a clear divergence on the hourly chart. I mean, it is diverging, but because price is lower and or the same, and the technicals are higher, but that's not now. Now we're talking. Now this is what I want to see. See how it goes from, yeah, I'm not really sure on the hourly to look at the 30 minutes. Yep, that's exactly what I want to see. So you have to look at all of the time frames, unless you don't want to look at the really low time frames, 10-minute, 5-minute, 3-minute, and stuff like that. But there are opportunities there. But if you don't want to watch them, if you can't watch them, then it pays to pay attention to at least 30-minute charts and above, because they have some durability, I guess would be the right word. So at 12:30 exactly, according to this chart, 30-minute chart, so only every 30 minutes. So a 30-minute chart had a very descriptive upside divergence. Very descriptive. You understand what I'm saying? See, this is clearly above the signal line, not any question about it. So I'll say, well, I don't know, but no, it is above the signal line. So therefore, at 12:30 today, you want to be buying the call options that would lead to success. And no matter how long you have to wait, could be 6 months. Doesn't really matter, does it? See what I'm saying? Because take an example like this one, like a 5:30 call. See, there were 7 cents, and then they went to $2.19 or $2.22, $2.25. See that? See, that was from 12:30 until, well, it first topped out about 1 o'clock, 1:30, say give it 1:30. So in 1 hour's time, you have more than 30 times your money. Doesn't really matter what happened the rest of the day, does it? Only in that 1 hour, because you want to take the surge out of it, like you've heard me say 100 times, providing you didn't have your headset turned off or your speaker turned off, microphone, whatever. But this is 30 times your money. So that's 3,000% plus in 1 hour. That's what we're talking about. Now that is a pretty good hour's work, wouldn't you say? How about the SPY? Yep, even better, because the price was lower. You see what I'm saying? Price was at 592, just 591 something. So give it a benefit of the doubt, say 592, and it went to 600. So if you'd chosen the most actively traded options in the world, then this is what you would be talking about. 1 cent to 65 cents. That is 65 times your money. Okay, 598. Those were 6 cents, and they moved up to $2.45. So that is, let's see, $2.40 from 6 cents is 40 times your money, right? Right. So that's, see, keep trying to tell you, under a dime. But you can't trade anything under a dime unless it has the pattern to go along with it. Then you clearly want to trade something under a dime. Isn't 6 cents under a dime? Yeah. See, so let's go 5.99. See, how much can you lose, for Pete's sake, if you invested in it? I mean, you're not going to lose anything. You're going to make money hand over fist. I mean, you make money so quickly you won't even know what happened. That's how quickly it happens. So these went from 3 cents to $1.55. So that was more than 50 times your money on the world's most heavily traded index. Hundreds of thousands of contracts traded on each strike price with a bid-ask spread of 1 cent. That's what we're looking for. That's what they live for. You see, not something like USO and things like that have, wide bid-ask spread. But see, the options don't expire, and they might have expired today. So but the volume activity is not nearly as heavily. Let's see, 0620. USO, see, from that point about 1230. Isn't that odd? Don't you think that's odd? That the very thing that is caught up in all this turmoil in the markets and stuff like that has a downside divergence on the short-term charts, right? It's very descriptive, right? Okay. So it was at 83 and a half or whatever, and it came down to 76 and a half. Whoa, pretty nice drop. Even though expect USO, it was moving up this morning, but you see the divergence, and it stayed underneath the signal line. So I was a little bit skeptical about USO, but long-term charts still good, but we're dealing with the here and now. So it doesn't appear like it has any options that expired today. So it doesn't have Monday, Wednesday, and Friday, only Wednesday and Friday. So let's see, 25 puts, they were, at 11:30, 12:30, so maybe 1,000%, or maybe a little more, 1,000%, maybe 1,500%, something, not nearly as much as the major index options, and doesn't have nearly the volume, and it doesn't have expiration today, and the volume activity on the thing, you could look at it and see that it's not very heavy. So in that case, forget it. No, I mean, you can make 10 or 15 times your money. That's true. Why make 10 or 15 times? You make 50 or 60 or 100 or 400, 500 times your money, on the index option. So, we trade index options unless one of the other things is more descriptive. In this case, they are not more descriptive. So if you follow what I'm saying, you can make money on this, but you'd be compromising a lot buying 2 days out. That's not so good. And something that doesn't have heavy volume activity, it's a little iffy. So there you go. And not to leave the Russell 2000 in the dust, we're still looking at a 30-minute chart. See, upside divergence, maybe a little more definition in the hourly chart. See, here's the original low over here, right here. See, and the technical low here. See, here is another retest of the price low, not met with a technical low. See, and this one here is lower than either one of these price lows, and yet the technicals are higher. You see what I'm saying? So the Russell 2000 today at 12:30 was down at 207. Well, like I said before, the options on the Russell have a tendency to be more fairly priced. So look at the 210 call, only 2 cents at 12:30, 2 cents to $1.56. So let me see here. What's $1.56 divided by 2 cents? Let me see. Oh, getting all choked up here. Let me see. I think that's let's see. I don't have to know, but it's 75 times your money or whatever. Yeah, $1.56 divided by 0.02 equals 70 8 times your money. See, easier to understand. See? So if you took advantage of any one of those three, they far exceeded the returns of the USO, which doesn't have options that expire today. So why mess with it when any of these things get 50, 60, 100 times your money? And, if you put $1,000 in there, you wouldn't have to be worrying after about the first minute or two, because your 1,000 would be 2, 3, 4, 5, 6, 7, 50, 60, 70, 78, bing, just like that. Times your money. Times your money. You follow what I'm saying? So that's the kind of pattern we're looking for. I don't care anything about the news and who bombed what. It doesn't matter. The point is, the patterns on each of the indexes. How could the indexes know, or the index people who trade, how would they know that there's any kind of event going to happen? They don't know more than we know. So anyway, the technical picture on each of the indexes was very nice, and any one of the three made you a good profit. And that's all there is to it. Piece of cake, huh? But you have to be paying attention. Tell you any more about that, you have to be watching when things happen, and you have to understand why, or technically why it's going to happen. And that's it. All right. Talk to you later. Have a nice night.